If you like watching people look at stock charts, you're in the right place. Welcome to the Early Buffett YouTube channel. Welcome to Market Call Recap, the daily show where we go over BNN Bloomberg's top picks, which is their stock market call-in show. So today we had John Hood on the show, who was looking at an S&P 500 ETF, an industrial spider ETF, and short-term treasury bills. So let's take a look right now. Welcome. As always, I always mention that I am not an advisor. I'm not a broker. I'm just a guy on YouTube just taking a look at charts. So please consult a professional, do your own due diligence. This is not financial advice and all that good stuff. So S&P 500 today, we're up, little bit, 0.09%. So, we'll call it flat on the day right here on the S&P 500. NASDAQ up a little bit, 0.7% on the day. NVIDIA is making a little bit of a recovery today after taking a little bit of a breather. So we saw, that we knocked on the door of 20,000 on the NASDAQ here. So things looking strong, but taking a breather, which is perfectly normal. And the Dow Jones, what to say about the Dow Jones? We're down 0.81% on the day. So John Hood had TPU as his first pick. It was an interesting reason for it as well. He kind of likes to sometimes ladder his S&P 500 ETFs because we all know there's so many S&P 500. There's so many S&P 500 ETFs out there, right? So for tax purposes, sometimes he'll just buy another one so that it doesn't kind of lump the cost bases together as it would when you're buying, several lots of the same ETF. So he uses this as, strategically, it seems, just to kind of when he wants to add, but he doesn't necessarily want to, sell or affect, the cost base of an existing holding. So interesting strategy. We look at the S&P 500 all the time on this channel when I usually start my videos. So we all know, but one thing that's interesting that you kind of zoom out here, and everyone's questioning this big rally, right? So, but if you think about it, you're looking back to, Jan of 2022 when things started to go south, right, for the S&P. But if you measure, right, we went, 420 days-ish, right? So, call it 2 years-ish, where we were flat. We just kind of, came back to where we were in December of 21. So, and now you're looking at, 20% since that time. So it's quite a long time, right? So yes, this rally is a very decent rally, but if you look at it on the long term, in those, that 2-year period, we're up 20%. Yes, relatively recently, but, it has been flat for the year. So there is a lot of new money coming in because it is a nice rally going on and it's attracting a lot of new capital, right? So it's an interesting thing to keep in mind with the S&P 500, but I won't, we could look at some levels here on this particular ETF. It's going to resemble any of the other ETFs, but that 40 level here, which, we could call it on the actual spider, is that 52-ish hundred level, right? Where we're seeing, we blasted through that level, right? So probably going to come back. I don't know. Nobody knows, but probabilities, if there's economic slowdown in the US, which a lot of people are suggesting there may be, we could probably come back to this level pretty easily. And that's not that much of a huge drop either. It's just coming right back to the 50-day, right? So interesting pick there. S&P 500 is kind of a core holding for so many money managers, right? So it's kind of, pretty obvious pick there. So industrial sector, always interesting. So what are we looking at here? It's been kind of hit, right? It was kind of going nowhere for a while, and now it's had a nice bump. We could look at what's in this particular ETF. We have GE, Caterpillar, Raytheon, Union Pacific, Honeywell, Eaton, Uber, Boeing, Lockheed, ADP. So there is a lot of talk about, there's a lot of bills that are being passed in the US as well, supporting infrastructure spending. So all of this feeds into the industrial sector. So a lot of people are quite bullish on the sector. And I mean, if you look at it long term as well, it's, very much up and to the right, which is nice. So what are we seeing now? We're seeing a nice trading range in my humble opinion here. We see that lower bound at 120. And then we clone this guy and bring him up here. We see that upper bound at about 125. So we're bouncing around here. So let's see. What are the, I'd be probably willing to look at picking this up at, the 120 level. Probably pretty low volatility. The options prices are kind of low. So if you look at the 120 puts, if you were to sell the 120 puts, I had a couple of videos recently where, we're looking at selling put options to get into positions a little bit lower. So just figured I'd take a look at this just off the cuff right here. And, it's 1%, over 51 days. So it's not going to give you a lot, right? Versus, if you were to kind of hold the ETF and just, just hold the actual ETF rather than, putting a put option. Might be the better idea. But, if you are still bullish on the stock, you want to sell a put, you want to collect a little bit of income, there you go. You get your 1% in a month. To some people, that's not too bad. Well, it's 2 months there. So, but interesting nonetheless for a trading range because, will this thing get back down to 120? Will it go back up to 126? Probably a good possibility, right? So interesting play there, but it's had a really nice rally. So this kind of distribution area is warranted, if I do say so myself, because it had a really nice runoff up from the October lows, right? We're looking at 24%, and we're currently sitting at 26% gains since those lows. So it's pretty decent right there. So that's a nice one. I mean, CBIL, this isn't really something that you trade if you're familiar with this type of security. It's, short-term treasury bill. So, you buy it at $50 and then when it pays out that, the coupon. So it'll give you 5%. And I believe it's paid out monthly. So, that's, not really something that we trade. You could hold it. It gives you a nice, risk-free 5%, just buying treasuries. So, but that's why these things look a little bit wonky in case you're wondering. He had some pretty negative views on the bank, so I just figured I'd have a quick look at the the Canadian bank ETFs that were mentioned during the show. I mean, this thing is yikes, right? Covered call Canadian bank ETF. If you know about covered calls, they have a covered call strategy where they hold the they hold the bank stocks, and then they sell calls on those bank stocks to generate extra yield. And obviously the banks have been not doing very well at all, notably TD, which was involved in some alleged money laundering disputes. So lots going on in there. I totally get it. I mean, I sold out of my Canadian, out of my TD a little while ago. I just think it's just too high risk. And he's, who knows if this is kind of systemic within the industry, right? So probably a good thing to just kind of back off, let things settle, see where all the chips fall with these bank stocks. But it's I wouldn't even trade this thing. I mean, you could maybe argue that there's a head and shoulders going on here, but with all the negative sentiment, I mean, these things are kind of uninvestable right now. So yeah, and the equal weight, doing a little bit better, probably being propped up by, National and Royal that are a little bit stronger than the others. But yeah, it's interesting, but I'm not sure I would really touch any of these things. So that's it for now. I hope you like this type of content. If you do, please be sure to like, subscribe, and until next time, I will see you tomorrow.